Welcome back to Investing Talk Podcast. Today we're taking a close look at Nektar Therapeutics, a company that certainly caught a lot of eyes recently. We really want to understand why this clinical stage biotech saw such a huge stock jump, what their main treatment could mean for autoimmune conditions, and, well, what the finances actually look like when you don't have a product on the shelf yet.
It's a fascinating case, isn't it? How just one set of clinical results can really change the story, build momentum, but, it also really highlights the risks, the long game you play in drug development. So we'll break down that recent news from Nektar, look at their cash situation, where they stand competitively, try to give you the full picture.
Sounds good. And before we get started, if you enjoy these analyses, please do think about subscribing, liking, maybe leave a comment on this one. It really does help us keep bringing these discussions to you. And if you're feeling generous, there's always the option to buy us a coffee. We definitely appreciate the support. Okay, let's get into it. For anyone maybe not following closely, give us the basics on Nektar Therapeutics. What area do they work in, and what was this big news?
Right. So Nektar Therapeutics is a biotech company, and they're focused on clinical development. That means they're all about discovering and testing new potential medicines. Their main focus is on therapies that interact with the immune system, particularly for autoimmune and inflammatory diseases. And being clinical stage is key, like you said. No approved products for sale right now. That really shapes their financials. Their lead candidate, the one making headlines, is called resbagaldesleukin. It's what they call a first-in-class T regulatory cell biologic.
Okay, first-in-class T regulatory cell biologic. That sounds important, but maybe a bit technical. Can you break that down? What are T regulatory cells, and what makes this drug different?
Happy to. Think of your immune system. It's incredibly complex. Within it, you have different cells doing different jobs. T regulatory cells, or TREGs, act sort of like peacekeepers. Their job is to tell the immune system, okay, calm down, don't overreact, don't attack healthy tissue. Now, a lot of older autoimmune drugs work by broadly suppressing the immune system. Think Amgen's Enbrel or AbbVie's Humira. Effective, but broad. Resbagaldesleukin is different. It's designed to specifically boost these TREGs, these peacemakers. The idea is to restore balance rather than just dampening everything down.
Ah, okay. More targeted.
Precisely. For conditions like atopic dermatitis, that's severe eczema, or alopecia areata, which causes hair loss, the immune system is mistakenly attacking the body. So boosting the TREGs could, in theory, correct that specific problem. And first-in-class just means it's potentially the first drug aiming to treat these conditions using this specific TREG boosting mechanism. It's a novel approach.
Got it. The immune system's peacemakers. I like that.
Yeah.
So what was the specific news on June 24th then?
That was the big day. Nektar announced positive results from their Phase 2b study called Resolve-VA-AID. This was testing resbagaldesleukin in patients who had moderate to severe atopic dermatitis. The really important news was that the study hit its main goal, the primary endpoint, and also key secondary goals.
Hitting endpoints, that's what you want to see in a clinical trial.
Absolutely. It suggests the drug is actually working in a statistically significant way for these patients. It's a really big step forward for this particular drug candidate.
And the market's reaction? You hinted it was significant.
Oh, it was more than significant. It was, well, explosive for a biotech stock. On that day, June 24th, Nektar shares shot up over 88% during the main trading session. Some reports even mentioned it was up over 100% at points during the day. Yeah. That kind of jump tells you investors saw this not just as a win for this one trial, but as potentially validating their whole approach, their science. It creates a lot of hope, not just for the company, but, for patients too. You saw that reflected online on platforms like X, a lot of positive sentiment, hope for new treatments.
Okay, an incredible reaction.
Yeah.
But here's the critical part for a company like this. That stock surge is exciting, but they still don't have a product bringing in regular money. So how are they fixed financially? Are they burning through cash quickly? Do they have enough runway?
That really is the crucial question for any clinical stage biotech. You need the science, but you also need the cash to keep the lights on and the trials running. Looking at their first quarter 2025 report, Nektar had about $220.7 million in cash and investments as of March 31st.
Okay.
Now, that is down from about $269 million at the end of 2024, which shows the cash burn. But importantly, they projected that this amount should be enough to fund their operations into the fourth quarter of 2026.
So a decent runway then.
Yeah. Yes. Relatively speaking, for a company at this stage, it gives them breathing room to hit these next key milestones without immediately needing to raise more money, which can be diluted for shareholders. It's a strength right now.
And revenue. Profitability.
Yeah.
I imagine those numbers look different for Nektar compared to, say, a big pharma company.
Very different. For Q1 2025, their revenue was $10.5 million. That was actually a big drop from $21.6 million in the same quarter the year before. And as we've discussed, clinical stage companies usually have minimal revenue, maybe from partnerships or licenses, not product sales. Because of that, and because of the huge costs of research and development, they consistently report net losses.
Right. So things like a PE ratio are kind of meaningless here.
Yeah, exactly. There are no earnings, so you can't calculate a meaningful price-to-earnings ratio. Free cash flow is negative because they're spending much more on R&D than they're bringing in. They don't pay dividends, they're reinvesting everything into development, and their debt seems low based on reports. It's the standard picture for a pre-commercial biotech. The value is all tied up in the potential of the pipeline, not current earnings.
So even with this good trial news and a decent cash runway, the fundamental risks of a pre-commercial biotech are still very much present.
Precisely. They will eventually need more funding unless they get a drug approved and generating revenue, or perhaps strike a lucrative partnership deal. The cash burn from R&D is real and ongoing. But what's changed now is the confidence level. Those positive phase 2b results make Rezpegaldesleukin look much more likely to succeed. That strengthens the whole investment case, makes the pipeline look more robust, especially since they're targeting big markets in autoimmune disease.
Makes sense. Let's connect that to the competition. How does Nektar's approach, focusing on these T regulatory cells, stack up against the established players and treatments?
Their main edge is really that novel mechanism we talked about. Boosting TREGs is just fundamentally different from the broad immunosuppression offered by blockbusters like Humira or Enbrel. While those drugs are incredibly successful and work well for many, they do carry risks associated with suppressing the whole immune system.
Right, like increased infection risk.
Potentially, yes. Nektar's approach, being more targeted, might offer a better safety profile or work for patients who don't respond well to older therapies. That's the hope anyway. Of course, Nektar is tiny compared to giants like AbbVie or Amgen in terms of revenue, market share, everything right now. But if Rezpegaldesleukin continues to show promise in later trials and gets approved, it could carve out a significant niche. It's a bet on innovation changing the standard of care.
Okay, so it's about differentiation through science. What are the next big steps for Nektar? What should people be watching for? And what are the hurdles still ahead?
There are definitely key things coming up. We're expecting top-line data from another phase 2 study of Rezpegaldesleukin, this time for alopecia areata, likely around December 2025.
So testing it in another condition.
Exactly. Success there would broaden its potential market significantly. Also, they plan to submit an IND, that's an investigational new drug application, to the FDA by the end of this year for a different candidate, NKTR 0165. This one targets something called the TNFR2 receptor, which is also involved in immune regulation.
A different target entirely.
Right. And it could potentially be used for other serious diseases like multiple sclerosis or ulcerative colitis. So that shows the pipeline has more depth than just Rezpegaldesleukin.
But the risks haven't vanished, obviously.
Not at all. Biotech is inherently risky. Pivotal phase 3 trials are much larger, much more expensive, and they can fail even after positive phase 2 results. That would be a major blow. Getting FDA approval is a huge hurdle. Promising data doesn't guarantee approval. The regulators are incredibly thorough. And then there's competition. Big pharma companies have massive resources and are also developing new treatments. Nektar faces well-funded rivals. All of these factors contribute to the volatility you often see in this sector.
So bringing it all together, Nektar Therapeutics sounds like a prime example of that high-risk, potentially high-reward biotech story, just with a fresh dose of positive news, fueling the potential reward side.
That sums it up very well. If you look at typical analyst views based purely on current fundamentals for a pre-commercial company like this, you might often see a hold recommendation. Why? Because the upside potential is clearly there, driven by Rezpegaldesleukin showing genuine promise in a mid-stage trial. That's exciting, but the execution risk getting through phase 3, getting approval, launching successfully is still substantial. That's just the reality. Their cash position helps. It gives them runway through these next critical data points, which is a definite plus, but it's still a long road.
Which leads to the question for you, our listener. You see this dramatic stock move, you hear about promising science targeting unmet needs, but you also understand the cash burn, the trial risks, the regulatory hurdles. How do you personally evaluate a company like Nektar? What factors weigh most heavily in your mind when you look at this kind of biotech opportunity? Is it the science, the management, the cash, the potential market? What tips the scale for you? It's all the time we have for this analysis. Thanks so much for joining us, and we'll look forward to the next one.